see if I can do it. Yay.
There it is. That lovely, that lovely recording in progress thing. Okay, great. All right. Hello, everybody. Good morning. Is it morning for anybody? Well, maybe if you're in Australia, it's morning. Good morning, good afternoon, good evening, wherever you are in the world. Thank you for joining us for today's Global Chamber Export Import Forum or Import Export Forum, depending on how you want to say it. I am the moderator, Anita Rodal, president of SBPI Services. SBPI Services represents several currency exchange companies and helps global businesses lower their rates and fluctuation risks across other cross-border payments. Within the US, we broker working capital, inventory, and equipment loans for importers, exporters, manufacturers, and other businesses. Our forum today is 55 minutes long. The last 5 to 10 minutes, we will open it up for Q&A and conversation. But until then, I would ask that everybody please, except if you are me or Honore, please keep yourselves on mute. And let's go back to just our photos. We don't need that up there. Thanks. Thank you so much. Okay, great. I do have a couple of networking tips for you. First of all, it's a very good idea to make sure that both your first and your last name are on your Zoom square. So if you need to, you can right click on it and change your name. That helps people find you afterwards. And then in the chat, even though I think that on this new format, you're not able to save the chat, but you could screenshot it, put your full contact information and your LinkedIn link in the chat. And that way people, if they're scrolling through there, they can screenshot it and find you afterwards. So today we are very lucky to have with us the amazing Honore Donje. And I'm going to tell you a little bit about Honore and how long it took me to pronounce his name correctly. Honore Donje is the founder and principal of Fidelius Tax, a boutique international tax firm based in Charlotte, North Carolina. As an IRS enrolled agent and an LLM in international taxation from the University of Florida and a Big Four accounting background, Honore advises US and international businesses, entrepreneurs, and high net worth individuals on complex cross border tax planning and compliance. Honore specializes in international tax reporting, including foreign information returns, FBAR, and FATCA compliance, which we will get into, cross border business structuring, and international tax planning for importers, exporters, foreign investors, and multinational businesses. Hang on one second. I am going to remove the chats from showing. He is passionate about helping clients navigate the complexities of U.S. international tax laws while minimizing risk and identifying strategic tax saving opportunities. Honore is a frequent speaker on international tax issues and is committed to making complex tax concepts understandable, which is a feat in and of itself, and practical for business owners expanding globally. So welcome, Honore. We're so happy to have you here.
Thank you, Anita. My pleasure.
Good, good, good. So I'm going to start off my interviews with 3 very quick icebreaker questions. Everybody gets the same questions before I get into my questions that are specific to Honore. So this is like speed dating. So 60 seconds max per question. The first one is, how did you get into this business?
Good question. So I moved to the US in 2011. I came to the US, I got my first master's in intellectual property law, and it was challenging for me to get a job. So I had a friend also who also from Cameroon, same thing like me, but he was studying corporate. So he's the one who advised me to go and study tax law. So that's how I went ahead and applied to University of Florida. I chose to study tax and with a specialization in international cross-border. Given the fact that nowadays things are moving very fast, people are not only investing or living in one place, they move around the world, and with that come in tax consequences. So that's why I chose to focus my practice on international tax, so I could be helping individuals and businesses who are moving around the world with their tax issues.
Perfect, perfect, perfect. Okay, now, real briefly, what do you like the best about what you do?
Oh, the fact that I could help people navigate the complexity of taxation. Taxation is something which the more I get into it, the more I discover that people don't want to deal with it. People just want
True.
somebody who can help them navigate the complexity, given the
Yeah.
fact that it changes all the time. What you know, what you learn in 2020 has completely changed in 2025. It is something new and it affects your life, it affects your businesses.
Yeah.
So having
Yeah.
that person, that trusted advisor next to you who can tell you that, okay, this is how this tax law is affecting your business or your individual's tax situation is helpful. And I see that when I help a client, either with
Yeah.
compliance or maybe solving an issue with the IRS, they are very happy and it's kind of life changing for them.
Okay, good. So you like helping people, and that's fantastic. Okay, flip
Definitely.
side of that question is, real briefly, what do you like the least about what you do?
Oh,
Like
the
in one or two
constant,
sentences.
I would say the again, it's a dynamic field. You have to be learning all the time. Like you are a student, you're a lifelong student. So what you
Okay.
learn today it might be changed. Maybe Congress might change the law and you have to relearn it again as if you're starting from scratch. That the continuous learning, the long hours, especially during the busy tax season, every year you keep saying that, oh, you're going to improve your system, you're going to improve your process, but you just keep going down the hole each year. Sometimes the long hours, like at the Big Four, it used to be crazy, working 80 hours,
Ah,
60. That was
that's
just
crazy.
unsustainable for in the long run. Yeah.
Yeah. Yeah. Okay. Now I get it. Okay. So there's no rest for the weary. Okay. Okay. So first question for you is, what is the biggest tax related surprise that catches businesses off guard the first time they start importing or exporting?
Yeah, one of the biggest surprise is knowing that they have reporting obligations, especially tax reporting obligation. They might have dealt with the custom, import their good, clear their goods with the custom, fulfill all the necessary stuff, but now they don't know which is that what is a tax obligation. How do they have to report their foreign, their cross-border transaction? So one of the biggest surprise which generally catches business owner is the fact that when they are going overseas, they don't they don't properly plan. They have a business opportunity overseas where they have to
Mhm.
ship a good or maybe they have to buy a product from a third party overseas. They don't really plan on how to do that transaction in a tax efficient manner because taxes permeate everything in life, right? Any major decision in life have a tax consequence. You are going to set up,
Yeah.
you are expanding overseas. You don't know
Yeah.
which corporate structure is the best, right? Deciding on the best corporate structure will affect your US taxation because US taxes on a worldwide basis. So whether you are making money in the US, overseas, even if you don't live overseas, you have to report the income here after reporting it overseas. So
Okay.
the biggest surprise again is lack of planning,
Lack of
which can
planning.
lead to
Okay.
substantial compliance in the long run and even
Yeah,
paying too much taxes. Yeah.
I can absolutely imagine that. What are the most common structuring mistakes you see when a company sets up an entity to start importing or exporting?
Oh, they rely on maybe a competitor or they just ask one friend who did some importing in the past, how they did. They don't really get into the nitty-gritty of it. They will say, okay, I just went to China, I bought the goods, I came back, or maybe I just went to China, I sourced it with the Chinese company there, or I'm entering into business with the China entity there where which will be manufacturing on our behalf. So they don't really take time to do again, to do the planning, to look at the tax impact, because taxes will drive even the legal side of it. If you don't choose the right entity from the beginning, right, down the road, you are going to have some issues with it. You are going to have, because let's say in a supply chain situation where you'll be sourcing your goods in a foreign country, are you going to be, are you creating an entity in that foreign country? Or are you having a third party agent who will be conducting certain activity for you? In either case, it might trigger some tax reporting. You just need to understand the extent to which it is triggered.
Okay, interesting.
Yeah.
Okay.
And
Um,
also, when companies are going overseas and doing business, they will create a company overseas. They just do
mhm.
business among themselves, selling the US company selling to the foreign subsidiary. So they might
Mhm.
sell it below market rate or above market rate. IRS doesn't like it. It has to be within market rates. If you do
Oh,
above or below, it might be a way
yeah.
for you to transfer money outside of the US or inside the US. So IRS doesn't like it. That's why there's something called transfer pricing. You have to conduct a study to make sure that if you are doing business overseas, you have to be within the market rate. Otherwise, they are going to recharacterize the transaction, and which might lead to penalties and additional taxes.
My goodness. Okay. I had not, that had never even entered my brain. Okay, we love our acronyms here in the US, and there's a lot of them coming up here in the question. So, what is an ICDISC, and why do you think so few eligible exporters actually use it?
Yeah, IC disc was is one of those tax incentive which
What does that
the
stand for? First, what does it stand for?
oh it stands for interest charge domestic international sales corporations. So IC stand for interest charge, right? Discs start for domestic international sales company.
Okay.
Yes. So an ICDX company is a separate company from a particular company. So you might have a business in the US, right? You serve US entities, US consumers and foreign consumers. Now, to take advantage of the tax incentive, you can create an IC disk. The IC disk will be the one doing the transaction with a foreign entity, right?
Oh, and that's all it does?
One more time.
And that's all it does? Like it, that's
Yeah,
its
it's
own
a sale.
specific.
Yes, it's a sale corporation. It's a sale entity. Is to take advantage of the tax incentive because the main tax incentive here is when you sell overseas, right? You get the profit. It's ordinary income, right? But with an ICDX, it will help you to convert that income from ordinary income, which could be taxed at a highest tax rate of 37% or 39%, like in the past, to a
Mhm.
capital to qualified dividends, who will be taxed at a capital gains rate of 10, 15, or 20%, maybe with another
Oh,
additional 3.8% for the net investment income. So
and
it transform their income from ordinary income to capital gain to qualified dividend, which give you a preferable tax rate. That's one of the
wow.
main
And
advantage.
that's amazing. Can all companies do that, or is there a specific size of company that qualifies, or
It
who
is
can do
open
that?
for individuals. An individual can set up an ICDs. An estate can set up an ICDs. A partnership can set up. An S corp can set it up. A C corp can set it up. That is one of those tax incentives because there are many other tax incentives for businesses, for
Mhm.
especially businesses who are doing business overseas, conducting business overseas. Another one is FIDI, which stands for Foreign Derived Intangible Income. This one is new. ICDX has been around for a long time. FIDI is new. It came in 2017. FIDI is mostly about incentivizing income which you earn overseas, right? So if you make a product here and you sell it overseas, you get a deduction. IC Disc, it transforms your profits from ordinary rates to capital gain. FIDI gives you a deduction, and FIDI is
Wow.
limited just for C corporation. So individuals cannot really take advantage of it. Partnership or S corporation cannot really take advantage. That's why FIDI, you will mostly see that with big corporation, large multinational corporation. It's not too mainstream like IC Disc.
Okay. Interesting. Wow. Okay.
Yes.
All right. Here's a few more. Yeah. A few more acronyms here. What are FBAR and FATCA filings? Who needs to worry about them? And what happens if a business doesn't know it's supposed to be filing? And this touched my life, well, vicariously. My niece moved to Australia and opened a business there and didn't know about FBAR initially. And
Yes,
she got dinged.
I will give you a background of FBAR because FATCA team has been around. FBAR, so Switzerland used to be like a bank, a tax haven, or they used to boast that they have the best kept bank secrecy laws in the world. A lot of Americans conducting business overseas will stash their money in Swiss banks. They will not report it to the US. And back then, in the past, US used to have a system where when you're doing business overseas, you don't need to repatriate the money in the US. You can defer it indefinitely, but things have changed. Even if you don't repatriate money now, you'll be taxed on the profit in the year you ended. So a lot of Americans were keeping money overseas. They were not reporting it to the US. They were doing business overseas. They were not doing the reporting. So there was a whistleblower, which from I think Credit Suisse or UBS, something like that, who he went ahead and said, "Hey, there are tons of Americans here who are not disclosing their foreign bank account, who have bank account, and they are not paying taxes on it." So in 2010, they passed the FBAR, which is for foreign bank accounts reporting. It says that if you're an American, you own foreign bank account for 10,000 and above, which means if you have an aggregate, if you have several bank accounts, when they aggregate all of them, it's 10,000 and above during the year, you have to report it to the US government. You are not paying taxes on that amount, but you have to report it. The main goal of FBAR was to fight money laundering, terrorism financing, and all those AML concepts. That was the goal to fight it. So it increased the burden for taxpayers, Americans who are overseas. If you have 10 bank account, you have to report it. You have 20 bank account, you have to report everything. If you are signatory on a bank account, that is, you don't own a bank account, you are a director of a company, foreign company, you don't own it, but you have signatory authority, you have to report it. That's why when the American became Pope, they were asking, will you be reporting all the bank account of the Vatican? Because now you will be in charge of all the bank account. So I don't know how the conversation and whether the IRS gave him a special exemption from reporting, but as an American who have to file taxes and who have FBAR obligation, the Pope has to report all the Vatican bank account, especially those which he has authority to control. So that was an interesting conversation when he was made Pope.
So does that also hold true for like the Secretary of the Treasury and,
No, yeah, that's
anybody
foreign
in the
bank.
US government?
So yes, everybody. Boris Johnson, the former Prime Minister of Britain, I think at one point he had to renounce his citizenship because he had to report everything. He was born in the US, he was born in New York, but he was raised in the UK. So now you are an accidental American. That's another issue. You're an accidental American, you have to report it. A lot of people find themselves in that situation.
Oh, wow.
If you have not been reporting it, you might be entering into one of the voluntary disclosure system in place, which the IRS puts, where the IRS will tell you, okay, you didn't know that you have this filing obligation. You come forth, you disclose to the IRS that you do a voluntary disclosure that you have all this bank account. We are going to forgive you for any penalty. Because when you fail to file one bank account, even if it's $10, it's 10,000 in penalty, just one. So the penalty is very disproportionate sometimes to the amount.
Wow. And is it for every bank account? So if let's say you're a signator on 10 bank accounts and you forgot to mention two, does that mean you pay a $20,000 or is it just
Yes, yes,
overall?
yes, you have to. It's for each bank
Wow.
account. But it is capped, I think it's capped at 50,000.
Oh, that's
It is
very
capped,
kind of
but
them.
but still, it's still severe. Just one bank account. Imagine in that bank account you have just $10,
Oh
and
my, right.
you completely forgot about the bank account. So
I guess the point is it could have more because it's open and it exists.
yeah, and then yeah, it could have more, but they just want to know. The U.S. government, I'm sure, it's like an overreach. They want to really know what is going on with your life in the
Yeah,
U.S. and outside of the U.S.
yeah. So what about FATCA? What does that encompass? The Foreign Account Tax Compliance Act.
Yes. So the FBAR is for foreign bank account. FATCA is for foreign financial assets. So you might own a an interest in a company, right? Let's say you invested in a company. You don't have an active valuation of the company. Maybe you have active valuation of your shares in that company. You have to report it on a separate form. So the FBAR is administered, both of them. The FBAR is administered by the Department of Treasury, but it is enforced by the IRS. FATCA is
Okay,
administered and enforced by the IRS. The
got it.
threshold for FATCA is higher than FBAR because for FATCA, it depends whether you are filing single, marriage filing separate, marriage filing jointly, whether you are filing in the US or outside of the US. So when you have a foreign financial asset, what will it be? You could have your interest, your security interest in a fund, your investment in a foreign company, maybe your pension, even your foreign pension. So anything that is a foreign financial asset has to be reported under form, under FATCA.
Is there a minimum, like if you only own a couple, like a small percentage of the company, or is it if you own over a certain amount?
Yes, that's why I said there's a threshold. Now the threshold will depend on your filing status, right? If you are filing married, filing jointly, separately, or individually, there's a threshold for each of them. And also, beside that threshold, there's a threshold of whether you are in the US or outside of the US. So if you're outside of the US, I think if you're outside of the US, it is higher. If you're inside of the US, it's lower. So yeah.
Okay,
So there's a
interesting.
threshold.
Okay,
It's just yeah.
yeah, wow.
But for
Okay,
FBAR is 10,000. FBAR is just a bank account. The other one is encompasses is both the bank account and the foreign financial asset because a bank account is a foreign financial asset. So it's kind of double reporting. So you might
got it,
have
got it.
20 foreign bank account. You will report it under FBAR, which is from 1114. And then
Yeah,
you take that 20 bank account, you go and report it again for FATCA, plus other financial assets, maybe your foreign pension, your foreign interest in a foreign company,
got
right?
it.
Your investment in a mutual fund, foreign mutual fund.
Okay.
So the reporting is just it's crazy.
Yeah, that is. Okay, wow. All right.
Yeah, so that's
So
those
let's
are
say,
things when
go ahead,
so when
sorry.
you're an exporter, let's connect it to when you're an exporter, right? You
Yeah.
let's say you create a foreign bank account over there to
Uh-huh.
ease your transaction. You have to report it if at any point in time it is 10,000 and above, or if all your account in aggregate it is 10,000 and above as an exporter.
Right.
But this applies just to US citizens. So if you're not a US citizen or US green card holder or US tax resident, then you don't have the filing obligation.
Okay. But if you're filing your taxes here in the US, then you do have to file the FBAR basically, right? If it applies to you.
If yes, everybody is yes, you have to. You can be in the US and have a bank account in France, which meets the threshold of 10,000. You have to file even when you're here. Or you can be in France, you have 10,000 and above, you have to file.
Yeah. Yeah. Okay. All right. So let's say if a company sets up or works with a related business overseas, like a sister company, joint venture, family members, business, what do they watch out for from an income tax perspective?
Transfer pricing. I think I touched about it earlier on. When you are doing business with a sister company or a subsidiary or any entity which you control, you have
Mhm.
to make sure that the transaction between both of you are at what they call arm's length, which means the market rates. You cannot be doing business. Let's say you have an intellectual property, you license it to a foreign entity, or you license it to a foreign entity,
Yeah.
which will be maybe manufacturing that product over there, and maybe you'll be shipping the product, importing the product back in the US. You cannot license that at below the market rate. There are rules for that in the Internal Revenue Code, where if you do that transaction below market rate, the IRS will come in and make an adjustment. So that's why businesses that have sister companies overseas, they have to have transfer pricing study. The transfer pricing study will just study your various mechanisms, how to do the business. They will compare the rates, the current rates at which you are doing business with your sister company as if you were doing it with a third party.
Okay.
Yes, so there are various mechanisms to do the calculation. So those are one of the things which, when you're setting a company overseas, you have to watch out. You also have to watch out whether that company is in a country which the US have a tax treaty to take advantage of the lower tax rates or to avoid the double taxation.
Okay.
There are something others, like as I was telling you about the the minimum tax is like a minimum tax where you can no longer defer income overseas indefinitely as it used to be in the past. You have to report your income, especially when there's a net income, not a net loss, every year, even if you don't make a distribution. So you have to analyze that and see whether you are exposed to that, whether each year you'll be making profit and how that profit is going to be taxed in the US. What will be your exposure? How to minimize it? Are you operating like in a high tax jurisdiction? Most European countries, their corporate taxes are higher than the US. So there are some exceptions where IRS would say, okay, you pay so much taxes overseas, don't worry about paying taxes in the US, but you have to report.
Of course. Always.
Yes.
Okay. All right. Very cool. So what should a business owner know about state sales or use tax exposure once they start shipping across either state lines or international borders?
Yes. So there was a case in the US called Wayfair. It dramatically changed the way businesses are doing, entities are conducting business in the US, especially at each state level. So under Wayfair, you don't need a physical presence in a state, right, to file a sales and use tax in that state. If you meet the threshold, the minimum threshold, let's say you have about 100,000 in sales, or you did more than 100 transactions in a particular state, you are already subject to sales tax. And sales tax is one of those things which a lot of companies, they focus about the federal income tax, but they fail to think about the sales tax. Because there's sales tax and then there's use tax. That's why they say sales and use. Sometimes you buy an equipment, you don't pay taxes on it, but you have to ultimately pay tax at a later point. That's the use tax. But for the sales tax, the simple act of buying an article which is subject to sales tax, you have to make sure you collect the sales tax from the consumer or the customer and remit it to the various states. So a lot of entities, when they are doing, maybe in this case, right, if you have foreign entities doing importation into the US and then you are selling all over the US, you might file all your federal tax return, but you forget to file the sales tax. You have to keep track of how much sales you made in each state, how much transaction, and you have to look at the requirement of each state because not all states have the same requirement. But as a whole, but principle matter, most states, if you make more than 100,000 in that state, you sell to more than 100, you sell for 100,000 in that state or did more than 100 transaction in that state, you have to file a tax return in that state.
And different counties, like even different cities, have different tax rates.
Yes, and it can
It's
trickle down. Take, for example, New York. New York have some, New York City, right? You might pay New York sales tax, New York City, they might have another particular tax that might be applicable to you. It might not be
yeah,
sales tax, it might be something like an excise tax, which you have to
but it's
also
all built
consider.
into what you're paying.
Yes, it's all built onto what you're paying. And those are the ones which entity, most companies doing business in the US, even US
Uh-huh.
company, they used to miss because they don't keep track of it. Or maybe they don't have employee because you have to have either employee,
Uh-huh.
you have to make sales or the number of the volume of the transaction.
Okay. Okay,
Yeah.
so I want to talk a little bit about for smaller businesses. So there's been changes to e-commerce and low value shipment rules this year. How has that affected smaller importers?
Yeah, small importers, it has been challenging for them, right? Especially on the custom sites. On the reporting side, the tax side is still the same, but on the rules have make have complicated things for them in the sense that you might be a low value importer, but you'll be subject to substantial reporting, unlike just like a large importer. So for small businesses who are doing business across country line or nation line, what they face is the fact that the compliance, the reporting, complying with, especially at the custom level, yes, the documentation that are involved. And sometimes that's why, and you see those tariff, they have kind of discouraged people to do some low value importation. It is mostly to incentivize high value importation. Like if you are importing cheap goods, sometimes the cost analysis or the cost benefit will not, when you after doing it, will not make sense for you to even do the importation. You rather source it internally, nationally.
Okay, interesting. Would it be different if they weren't doing low cost wood, they were doing high cost wood?
Now, when you do high cost, right, the cost analysis will make sense because now you have to comply with all this documentation, custom enforcement. It will make
Uh-huh.
sense compared to the amount in consideration. It's just like when two sister companies are doing business, one is foreign, one is US, right? When the amount in consideration is significant, the IRS will pay close attention whether you did any transfer pricing study. But if the amount in consideration is 10K, 20K, sometimes IRS will be lenient. They don't have resources to spend on those type of low value.
Smaller.
Yes.
Got it. Yeah. Okay. Let's see. We've got about another uh 10 minutes, so I may not do all the questions here. Let's see. Um, let's
Oh,
see.
that's good.
If okay, so Congress passed major tax legislation last year that changed how US taxes foreign income. What should business owners with international operations know about it?
Yes. There have been those changes affect like foreign tax credits. So they have increased the threshold of foreign tax credits which you could take. So if you pay foreign taxes and then you want to take it in the US as a credit, it was capped at 80%. Now they have increased it to 90% of the foreign taxes. That's one. And then the FIDI also, which I mentioned, the foreign derived intangible income, which I mentioned, they have also increased the percentage. No, they have reduced the percentage inside from
Oh,
50% to 40%. Yeah. Now, and
oh,
then the other one is about R&D expensing. Let's say you are doing some research and development overseas, right?
mhm.
Back then you could take the expense over time, but now you can expense it in the year you incur the expenses.
So is that a good thing?
It is a good thing. You can take all your R&D expenses. So if let's say you invested
Oh,
in
got it, got it, got it. Okay.
yes,
Yeah, that
you
makes sense.
you spend 100,000. Back then you have to take it maybe over 5 years or 10 years, right? But now
Mhm.
the 100,000 you can expense it in the year you got it. You spend the 100,000.
Okay, that's good. All right. Um, let's see. If you could give business owners just one piece of advice about tax compliance before they start trading internationally, what would that be?
Planning. Plan before you act.
Oh,
Planning. Yeah.
planning.
Planning will save you a lot. It will let you know exactly what you have to do and what you should expect, your reporting obligation, your tax exposure, how much taxes you are paying, both in the US and maybe overseas. I will always advise them. Like the bulk of the work I'll do is always about delinquent filing. There was an opportunity overseas, a US company jumped on it. They never planned, they never reported it. Then one day they learn they have to report. Now it has been like 4 years they have not been reporting. There's 4 years of tax penalty exposure. We have to come now and do a cleanup for 4 years. And then maybe we have to restructure the business again for the future. Whereas before moving overseas, if you have done some proper planning, the right choice of entity, right? How you will be repatriating cash back home. If you have
Right. So
done
I
all of
think
that,
so what I'm hearing also is that, just because you're operating out of one entity here in the United States, if you're going to start doing things overseas, you might need a whole different structure. Like you doing it with your current company may not be the way to go.
it depends. It depends. You can still use a foreign entity, or you can use your US entity doing business overseas. It just depends on what type of business you are doing, your long-term goal. If it is something which, if it's a one-time transaction, right, or two-time transaction, fine, you can use a US entity. But if it is something which you want to build a market presence in that country, in that region, sometimes it's advisable to just have an entity over there. So it's just something. It's just, again, it's planning. You just need to plan.
Yeah.
Think,
Fine.
what is your long-term goal? What do you plan on doing? Then we'll come
So
up with
real
the right
estate is
structure.
okay, yeah. So real estate is location, location, location. And taxes, it's planning, planning, planning. Like that's the most
Yes,
important thing.
tax is planning.
Yeah.
Tax is
Yeah.
proactiveness.
Yeah.
Because when you
Oh,
plan, you already have an anticipation of how much you might make, right? You
yeah.
already know that, okay, if the tax law changes over time, this is how it might affect, and this is how we
Right.
can restructure. And again, the way taxes, which is what I like, is the dynamism of tax. You set up an entity today. We did all the planning. After 5 years, a new tax law came into place. We have to revisit that structure and see whether we have to restructure it again
Okay.
to
That
fall in
makes
line with the
sense.
new tax law. Yeah.
Yeah. So um, I think I know the answer to this, but you know, as opposed to just relying on a regular accountant or bookkeeper, at what point should a business owner bring a specialist like you into their circle?
Yeah. When you see that your situation, you are dealing with anything foreign. You are dealing with foreign individuals. You are dealing with foreign contractor. You are dealing with foreign company. You want to go overseas. You want to do anything foreign, then you have to bring a specialist to learn about the consequences, right? You might be in the US, you have a company that is, you are sourcing overseas. They are sending you, you are buying goods from them, or maybe they are providing you a service. How do you pay them? And when you pay them, how does that reflect on your accounting? And from the accounting, how do you report? Are there any tax consequences? So that's when you have to look into it. If you are a regular accountant dealing just with US domestic tax issues, it will be simple. But when it comes to foreign, you need somebody who knows what they are doing. Not only international tax is complex, the penalty exposures are very severe, which makes it some you come across a lot of CPAs who don't want to do international. They just refer out. They don't have the
That
time
makes
to
sense.
learn it. They don't have the time to learn it. They don't have the professional ability to risk, because if they don't know what they are doing, they might expose their client to penalties and interest. They are not
Right.
open to that. Yeah.
Yeah. No, that makes sense. So you kind of, it's a team. It takes a team. It takes a village
Oh yeah,
to
it
get it
takes a
done.
team. So we are like the specialists, right? When you go to the hospital, you meet your PCP. If there's
Yeah.
something complicated, your PCP will send you to a cardiologist, a nephrologist. So we are like that. We are like a cardiologist, the nephrologist.
Yeah.
So we work mostly
Exactly.
on referral from others, like somebody like me, I work on referral from other CPA.
Got it. Yeah. No, that makes
Yeah.
perfect sense. Okay. So last question. Can you share a story without naming names about a company that came to you too late and what you would have done differently if they had come to you earlier?
Yes. So like as I mentioned, I have so many examples which I don't even know which one is the suitable one. Where this company, the it's a US company, a partnership. They had an opportunity to invest or to do some work for energy efficiency in Spain. They got loan from a company in Dubai. They started conducting business in the foreign company in Spain. So year one, they didn't do any reporting. Year two, they didn't do any reporting. Year three, they learned that they have to do to report that foreign investment. And when you look at the amount in consideration, it's in the millions. So they had to come to me and we had to look for a way for them to file and not be exposed to all the penalties. So we had to do some delinquent filing. After the delinquent filing, we had to restructure their business to make sure that they reduce their compliance burden and then any tax exposure as well.
The restructuring, though, doesn't change the mistakes that were previously made, though, right? It just helps it moving forward.
Yes, you have moving forward.
And like, so let's say somebody's, years delinquent in filing certain things like that, and they owe a lot of penalties. Um, is the IRS like, will they let them do payment plans? Do they say, no, you have to pay all this at once, or, do they work with the companies to make it work so they can keep, so it doesn't put them out of business, for example?
Oh yeah, oh yeah. The IRS, the one thing which the IRS likes is people come forth and say that, hey, I didn't know I have a reporting obligation. But now that since I learned about my reporting obligation, I'm coming clean. I want to report everything. So since I'm reporting everything, I'm asking for leniency. Please abate any penalty and interest that will ensue. For the taxes, I will pay accordingly, right? Because when you owe taxes, penalties and interest accrue.
Yeah.
Sometimes they are very substantial if the taxes owed is also substantial. So you want them to help reduce the penalty and abatement. And sometimes you want even the tax, if you can reduce it, possibly
Yeah.
yes, but you want to you always request that, and the IRS is very lenient about it. They like when people come forth because when the IRS themselves then discover that you have been doing business overseas, you have never reported it, then that will be an issue. It could be even criminal because it will be considered like tax evasion.
Oh, wow.
And I know people always ask me, how will the IRS know I'm doing this import export or I'm doing business overseas? I always tell them that the US and almost all countries in the world, they share information. So there's what they call the automatic information exchange between the IRS and the tax administration of almost all countries in the world. So they share information. If, let's say, France want to have information about one of its citizens in France who lives in the US, they will reach out to the IRS. IRS will provide them all that information. Same thing with France. The US will reach out to France. France will provide them those information. Foreign bank account, you will say, oh, you're not reporting the foreign bank account. They don't know. When you go and open a bank account overseas as an American, you have extra forms which you have to fill, the FBAR form. Every quarter, the foreign banks report directly to the IRS. If the foreign banks fail to do that, they themselves are exposed to a 30% withholding of any of their money that transits through the US.
Oh, wow.
Oh,
Okay,
yes.
that's severe.
Yes, that's an incentive for banks. Now,
Yeah.
you have this intergovernment agreement, which in some countries, the bank report directly to the IRS. In other countries, the bank reports to their local tax administration, and the local tax administration report to the IRS. But in either case, the US have implemented mechanism where it will be hard for somebody to feel that they are too smart than the US government, that they will not report and the US will not know. If the US
Oh,
discovered on their own,
yeah.
they might launch
Yeah.
a criminal investigation.
Okay. Got it, got it, got it.
Yeah.
Okay, so we have about 5 minutes left, and I do have one more question for you, but what I want to do is open it up to see if anybody else has any questions or comments, and if they don't, then I will ask this last question.
I
So
think
if
Demetrius had a question. She's saying, is it a separate filing with the state or with the Secretary of State?
Demetrius,
Good.
you want
I don't know.
to take yourself
Yeah,
off mute?
good afternoon.
Hi.
Hi, this has been so detailed. I've been trying my best not to get nervous and realizing that, oh my God, this is such good information, and I hope that this replays like millions of times so that people can hear this because there's so many different mistakes that are being made. Okay. With that said, when you were talking about, it's ICSID, right? It's not ICSID like the settlement agreement, international settlement agreement. And so you were giving all these acronyms in the beginning, Anita, and then but I don't know if it was writing them down. It might have been phonetically and not
Oh,
really
it
what
was,
the acronyms are.
Oh, IC disk.
Yeah, so I
yeah,
see
I
that.
see
So
this.
that's one of them, right? But when you were saying they have to create it, I was like, wait, is it like a separate company, or is it just the part of the Internal Revenue Code that they're developing something different? That was like the translation of that was not clear in my head as to how those work.
Yeah, it's a separate entity.
So it's like, in fact, you're creating two different companies inside of that state.
Yes, yes.
For every state, if you're opening up subsidiaries in every state, you're going to register the company name as well as the other into what is it? What is it?
I
So
see
I
DISC.
see disk, right?
ICDISC.
Yes, so the IC disk you create the entity, is one entity which you create. You don't need to create it in every state because I see this is mostly foreign. You are not doing business in another state. You are doing business overseas. You are selling overseas. So
Oh,
it's mostly one
I thought
company.
it was for the inbound. I thought it was for the foreign company doing business in the United States, but it's actually the other way.
Yeah, the U.S.
Yes, no,
company
it's
doing
the other
business
way.
abroad.
It's a US company doing business abroad.
I understand. Okay, that's where I got mixed up. And then there was one other one. There may be a few other ones, but one other one right before that that you talked about.
The
The
FDII, which
Yes.
stands for
FDTI?
Foreign Derived Intangible Income. So that one is also when you are doing business overseas, right? But they put the unlike IC disk, the the FDII is to get a deduction, whereas the IC disk it helps you convert your income from ordinary to capital gains.
Yeah,
That
that
is
is really amazing. And you said that's new, and how new
no,
is that?
it's been around for a long time. Again, so it's something which if you are not in the international tax space or you don't have a deep expertise in tax, you will not know about it. But if you are working with international tax experts, right, and you do a lot of maybe shipping overseas, you sales overseas, you do a lot of outbound transaction overseas. That's something which your international tax advisor will always recommend you if we should not have an ICDs corporation conduct all the foreign transaction.
Amazing. Thank you so much. I will be
It's
calling
been
you on this. Thank you.
yes, it's
Awesome.
been around for a long time. People don't just take advantage of it, and it's because they don't know. What is new is the FDII, and the FDII is kind of limited in scope in the fact that, in the sense that it's mostly for corporation, C corporation. How many businesses in the US conduct do that? How many businesses in the US operate as C corporation? Very few. Most are partnership and S corp. So that's why you don't see it. C corporation. When I was at the Big Four, we used to do a lot of FDII. But since I started working on my own, I don't think I've come across a client with an FDII situation because you don't find many of them. Yeah,
Got it. Thank
Maybe
you.
they'll extend it. Thanks for the question, Demetrius. I love it when two attorneys talk to each other.
yeah,
Anyways, and Demetrius has been a guest on my export import forum as well. So we
Yes,
are
you
at
asked
the
hard
end of our
questions, Anita.
time. I'm sorry?
You asked the hard questions, Anita.
Well,
I
someone's
love
got
it
to do
though.
it.
Yeah, somebody's gonna do
Thank,
it. Thank you.
thank
no,
you. Thank you.
I love the question. I
Oh,
like to like businesses about the intricacy of doing business overseas
mhm,
because it's not as straightforward as people might think. There are a lot of
yeah,
nuances, a lot of small rules. If you don't know what you are doing, you miss or mess up things together.
yeah. No, that makes perfect sense. Bottom line is people need you very much. It's good to be
Yes,
wanted.
and they need
Yes,
me. They need me in the beginning, not at towards the end, because towards the end it become more expensive.
right. It's better
In the
to
beginning,
avoid the problems than to have to go in and fix them.
yes, yes,
Yeah,
and
got
it's
it.
simple,
Yeah,
and it's very simple. At the end of the day, when you are doing anything cross border, the first thing the IRA care about is the reporting. They don't care about the
right.
tax; they care about the reporting. Everything
Interesting.
international, almost all the forms in international tax are informational return. They are not income tax return. You don't even pay taxes on it.
You just have to let them know what you're doing.
You just have to let them know what they are
Yeah.
doing. They want to know
Okay. Everything.
everything about your
Yeah.
income everywhere.
Yeah. Yeah. Okay,
Yeah.
got it. Well, okay, we are absolutely out of time right now. So I do want to thank you so very much for being my interviewee today on the Export Import Forum. Amazing information. And to everybody out there, if you enjoyed today's discussion, I hope you'll tune in for next month. It's always on the fourth Thursday of the month at noon Pacific time. And in the meantime, you can check out all the other webinars going on a daily basis on the Global Chambers events page. And in the meantime, I hope everybody has a great rest of the week and a lovely weekend coming up. Enjoy the rest of the summer. and we will see you in August. Thank you so much,
Thank
Honore.
you. And if you guys want me again for the next time, I'm open. I enjoy talking about cross-border transaction to people, so I'm open for another session if you guys want it.
Thank you. Maybe in the future, I'm cycling through a lot of people, but there's always more information to talk about. So, absolutely.
Okay.
Thank you, everybody.
Thank you.